focus. Ideate, innovate, enable.
Ideally, a company should be doing all of these: managing hazards, complying with laws and regulations, controlling uncertainties, and viewing risk as an opportunity to enhance stakeholders' value. But in reality, this does not happen. This episode discusses the need to create awareness about risk management among corporate India. Educating India Inc. is a talking point. Okay, if I may begin by asking, I want all the panelists to respond to this one. Why is risk management accorded low priority in corporate India? Not many organizations are aware of the risk of the ERM, I'm told. Is that right? We'll start with you, Mr. Bambani.
That is correct. Actually, risk management process itself is a fairly detailed one and expensive to begin with. So people tend to look at it as cost rather than opportunity in which they are investing. The second point is people are not even aware of what risk they are running into. It's something to do with experience and education behind it.
Okay.
I would put it more like the experienced manpower that they have behind the whole, and lack of focus by the top management.
Okay. Alok, your experience?
Our experience has been mixed with it. If I look at the last 2 or 3 years, there are some corporates who are moving up the value chain, and there are corporates which are looking at risk differently and in a more holistic way. But there is still a large proportion of corporates which are, I would say, have not woken up to the idea. And there are some corporates which have just moved from the second category to the first category. So our experience is mixed, but at least the direction is positive.
Okay. Sunil, what is your take on this?
Ravi, I come from the pharmaceutical industry, as you know, and that's being the highly regulated industry. So I would not say risk was having a low priority in the past. No. Only thing, the risk were managed in the silos, maybe at the respective function levels. Now, with the more and more regulatory requirements, now the need is felt to have a more corporate, to have the proper risk management framework more at the corporate level. Risk were managed in the past. Naturally, that's why the business has come to that level.
Okay.
But now, there is more need to have a more centralized focus for this entire subject.
Mr. Kapoor, you may want to add to that?
Sure. So if you ask me, risk essentially has been relegated as a compliance function, and of course it's costly, and all of those factors have played to it not being right on the top of mind for a lot of industries. And like I rightly said, pharma, telecom, financial services, some of these industries are fairly advanced as far as risk management goes. But I think with a new set of regulations coming in, there is a drive towards looking at risk more strategically, getting more value out of it beyond just compliance, and actually creating a risk culture which spreads across the organization or permeates across the organization. So if you, nutshell, companies are moving towards more effective risk management processes within their organizations.
I have this survey which says that various studies have shown that risk management model in India still is in infancy. 64% of non-financial companies indicated they are not put in place risk management. Only 20% said they have a risk model in place and have articulated the risk appetite. So this is what the survey says. So how do you respond to that?
No, your survey is absolutely right. Even in the pharmaceutical company like ours, for example, very recently we have set up a formal risk management committee, which was not there earlier. Now we are in the process of developing a formal risk management framework also. So as I said, risks were managed earlier also, but not at a corporate level, at the functional level, at the respective functional level. But now there is a need felt now, and especially because of the new regulations coming under the listing agreement, under the Companies Act, the need felt now to have a more structured risk management framework. That's the thing that I would say.
Okay.
To add to this, I want to say that apart from the fact that the formal, as Mr. Makharia has said, that the formal way of tackling risks has not come in till recently, I have a slightly different experience in the sense that those companies which have adopted risk management practices, they have adopted at the board level or the risk committee levels, but culturally, the company has not changed too much. So the people at the ground level, they are not told simple things that they have to follow and simple actionables which are easy to understand and easy to follow. Those things are not told. So although it has become a tick box board management exercise, it is not flowing down down to the ground level.
So everybody not brought on the same page. That is what you're saying.
Yes.
Okay.
And one more thing that I would like to say is that the traditional risks that we have been looking at, say a financing risk or a foreign exchange risk or a credit risk, which was anyway looked at whether the risk management function was brought under one umbrella or not. But the new kinds of risks which people are now looking at and which are more complicated to handle, something like people risk, regulatory compliance risk, or some kind of a reputation risk, which are becoming more and more important and can bring a business to a halt suddenly, they are now coming into prominence with this risk management function gaining much more importance.
Are foreign companies more receptive to risk management model?
You know, Ravi, actually the MNCs are by nature, but if we go back to the same question, a formal way to manage risk actually came in with the SWA. Yeah, and what did they do? They basically asked companies to put in an internal control mechanism,
okay,
and then certify. So it's a good framework if followed properly. So it doesn't mean it will avoid all kinds of risk and all kinds of bankruptcies, whatever are happening. But what it means is if taken seriously and the internal control procedures are put into place to certify what is required in SOA, then we are addressing the risk holistically. So that's one part of it, accounting. So MNCs by their nature, because they operate across geographies, across regulations, are more prone to or have higher risks. And the way to manage it is also pretty central.
Okay.
Because you have to have all people on the same page.
True.
That's why lots of guidelines and processes are sort of perpetuated across the world.
Okay, let me get a look in. Is there a tendency to underinsure? Is it because you want to save money by way of premium, or you think it's going to be a low probability event, nothing will happen, so I don't want to cover myself? If a project could be worth 10,000 crore, it could take a cover of just 1,000 crore.
My experience of late has been any large company or a company well managed in today's world does not do it deliberately. It may so happen that they are underinsured, but that is not done deliberately. But in a mid-size risk or an SME kind of a risk, you might see a deliberate underinsurance and then managing at the time of the claim. So I would not say that underinsurance is the basic criteria at which most of the companies which are reputed and large will go about in today's world.
What kind of advice would you give your client if they are doing it, if they're doing so?
Yeah, of course, we will say that you have to insure adequately. And the second thing is whether you know what is the adequate amount of insurance. Lot of times underinsurance happens because you are not aware, you have not gone into the depth of the subject, you have not valued yourself recently, you don't know what can go wrong at the maximum level. All those things have not been taken into the account, and it has been done in a very perfunctory way at the time of taking insurance. This ultimately leads to underinsurance. So underinsurance deliberately, I would say there is a very low probability, but underinsurance ultimately it happens because of many factors. Okay. It does happen.
The CEO has to bring everybody on the same page. But do you see people generally setting up a risk management department and they are just for a project to project basis, or they are operating in a silos? Look.
Yeah. To begin with, in most of the corporations, it does happen that the different departments, whether it is the finance function or a legal function or account function or the sales function, they tend to work in a silo, but it is the job of the leader or the manager who is managing all of them to bring them into one page. So it is I would say people at the board level and the CEO, CXO level, they have to basically bring everybody onto one page and such that they don't work in silos. And it is and this culture that you tend to break everything which encourages people to work into silos. You have to break that culture. Basically, I would just want to add to the point that we were discussing before this, is that human beings are human beings. They work out of fear or greed.
Yeah, true.
So if greed is encouraged a little bit more than what is normal, then you will have a crisis like Lehman Brothers. So basically you have to have a good balance of fear and greed in the organization. So working out of silo also is somewhat linked to this, that if individual incentives are linked to in such a way that you bother about your function and don't bother about anything else, then it might lead to organizations functioning in silos.
Okay, let me get in the pharma company. What are the major risks in the pharma company? I was told very typically, where R&D is concerned,
Yes.
the strike rate is just 7.5%, and it takes 11 years to make it marketable. So there is one is you have to develop some product, and there's also the quarterly pressure. So how do you balance both?
R&D, research is the backbone of any pharmaceutical companies.
True.
And despite seeing the quarterly pressures, we cannot avoid spending on the research. For example, a company like ours, Lupin, we spend almost 8 to 9%, or I would say slightly more than 9% now, on the research activities. Sometimes you may get the fruits, sometimes you may not get fruits. So that's because we'll have to be ready for the future. We'll have to keep, that's why the spending on the research is the key. And that's a trend, especially in the multinational companies. Talking about, just moving from the R&D sides, and if you talk about the main risk which the pharma industries may face, and if I say in the three top risks, one would be the regulatory. So any issues connected with the non-compliance stage of the requirements of the regulators like US FDAs, and that can have a serious consequences. And you must have heard about some of our peers have been facing the problems. Second would be the product quality. Again, that's a major risk thing. We cannot compromise, and I would say we cannot take any shortcuts on the product quality. It has to be zero tolerance as far as product quality is concerned.
Okay.
Third, if you allow me to say, being the finance person, another very important risk which everyone will have to face, not only the pharmaceutical company, foreign exchange risk.
But that is given in most of the business, export business, foreign exchange is given.
But we'll have to manage that.
Hedging is a part of your game. I think it's the second nature, I suppose.
Though you're right, but especially when the company like ours, when we'll have almost 73% of the international business, any risk associated with the exchange fluctuations, and especially when the rupee appreciation scenario, it may put the pressure on the earnings statement.
Okay. I want Mr. Bambani, Mr. Kapoor to talk about the role of regulators. Are they actually making risk? People take no risk at all. What is the role of regulator in this whole except risk model?
Regulator is to provide a direction to the market, to encourage the markets to grow. And over the years, I have seen people who have come to be regulators are very, very knowledgeable. Once or twice, I have also seen actions being taken which are counterproductive totally. And that may be because understanding of, I actually saw for the NBFCs, the NCDs or the bonds issuance was suddenly made to be only secured instruments can be permitted in the market. And that is quite unexplainable as to why something like this happened. And I believe it happened because the regulator wanted to insulate some of the individual or high net worth individuals who also participate in this market. It's a private placement market mostly. But then to protect one segment of the investor, you cannot block the market.
Mr. Kapoor, your comment on that?
So I agree. I think the regulators are providing the right direction. You know, a lot of what has come out, and specifically in the Companies Act, because that's happened in the last year or so, that would provide some level of benefit to the organizations in the long run, because there will be higher level of transparency, there will be better controls, a risk management framework. So access to capital markets, both in India and overseas, becomes better. Secondly, having this compliance as part of your framework initially might be painful, but eventually it will help establish that risk culture, or a culture where there would be strong consequences if one is to go out of line as far as the ethics or the processes of an organization are concerned.
Coming back to our topic actually, educating India. So how do we create risk awareness in the organization?
It starts with recruiting the right person, right experience, especially when we look at the financial markets. Lots of risk emanate and organizations end up taking risk because the kind of people, the experience they are bringing onto the table is not adequate for the position the person is supposed to be handling. The second thing is training. Actually, I am at loss of words in terms of explaining which is a very good risk management program. We have product courses, but effectively if you say somebody has to be put through a risk management program.
Okay, and is there no syllabus in the college or university level for risk management?
I don't think it's adequate, and also it's adequate at that level because this is a continuous learning process. Okay. People who are operating also have to be upgraded in terms of their skill sets, in terms of their knowledge. So it's a continuous process, and industry forums help. More important, it's the ego, ability of the person to absorb and accept there is something wrong. Actually, if I say so, bulk of the losses are made in the finance function without realizing it. Because the people are taking decisions without realizing overall risk paradigms or whatever is available in the market.
Mr. Kapoor, what do you think is the best way to integrate risk management into the corporate culture?
Yeah, so basically at the, it's very important to identify the do's and the don'ts at the senior most level in an organization. So really establish the tone at the top from the board. Have a very strong code of conduct which is well percolated, and effective training happens across all employees. Processes and policies established to cover risk management, and then a strong compliance culture. See, essentially if you put processes, policies, everything, and you don't have compliance towards that, then people are not aware about the consequences of not following those. And it's important to have that compliance culture in place. And yes, training is very critical. I mean, the training should be a continuous process so that people are taught about new risk dimensions, and also are there's continuously reiterate the importance of risk management.
What is the advice you want to give India Inc?
Basically, the tone from the top, walk the talk on risk management, and hire right kind of people and train them continuously.
Alok?
To India Inc Corporation, I would suggest that one is that be aware of the risk, discuss the risk, and a priori simulate a program which can tackle these risks.
Okay, Sunil?
A business has to work to minimize the risk, no doubt about it. It's a continuous activity. But all the activities or our intention or our aim should not be to escape the risk. And if we start doing like that, it would result into I would say the biggest risk, and the least rational risk, the risk of doing nothing.
Okay, that's the danger actually.
So it has to be proper, it has to be fine balancing. But yes, having said so, it's a continuous exercise. There has to be continuous awareness. There should not be any shortcuts. Never compromise on the compliance side, regulatory sides. That's the key thing.
Okay, Mr. Kapoor, final word. All organizations should have to take some kind of risk to enhance the stakeholders' value.
Yeah, absolutely. I mean, organizations are built on taking risk. So entrepreneurship is about taking risk. But I think what is important is to define a risk appetite. And different areas might have different appetite, some higher, some lower. But it's important to recognize risk or risk management as an enabler of business rather than as anything else. And that would help drive a culture of risk management across the organization. And then I think compliance and training are very, very critical to actually execute this entire discussion or execute the risk management policies of an organization.
Okay, Kapoor, very well put. Thanks a lot for being on the show. Gentlemen, thanks for being on the show.
Thank you.
Thank you.